Hello, namaste, and welcome, Radio Zindagi listeners. Today we have another exciting show, Power Hour with Amit Inamdar. You are going to get the power packed 30 minutes of information on mortgages and the loan approval process. We always welcome you to call us at 510-770-1550 to ask a question on the radio. However, if you are unable to get in, you can always submit a question for a personal response. Just go to Amit's website, ownsweethome.net, and click on the radio show link to submit your question. And you can always find Amit Inamdar just by searching his name on Google. Hello, Amit.
Hey, hello friends, hello Renuka, own sweet home, and welcome to my show, Power Hour with me, Amit Inamdar. Today we are going to talk about mortgage basics. Maybe we will go beyond basics, and the questions that we might get, we might even go even deeper. So the first step is any home purchase is to get a pre-approval for the home loan to find out your financial reach. In one of my previous shows, we talked about the differences between a pre-approval and a pre-qualification. In my recent webinar, I showed the webinar attendees tools to get them pre-qualified. As a matter of fact, I showed them how to get pre-qualified by themselves by sharing the tools with them. And you can too, and find out about how you can pre-qualify yourself and use these tools. Just listen to my webinar that's on my website, ownsweethome.net. Today, we are going to figure out how does one get pre-approved for the mortgage.
ओ अच्छा, तो घर लेना है तो पहले प्री अप्रूवल की ज़रूरत है. वैसे प्री अप्रूवल से पहले क्रेडिट रिपोर्ट रन करना ज़रूरी है, राइट?
Yes, absolutely. The credit report, Renuka, is one of the important factors in getting your pre-approval for the loan. Higher the credit score, it's always easier to get pre-approved. Lower credit score creates headaches in the approval process. Typically, the scores are lower because of missed payments on the loans like car loans or even student loans or any other loans that you may have, or maybe missed payments on the credit cards or even delayed payments on the credit cards. If this happens, lenders require you to provide explanation for the delinquencies or late payments or defaults that are showing on your credit report. Are we okay here, Mike? Okay. All right. So for reasons provided to lenders that you're going to tell them about why those delinquencies happened, you want to make sure that you give some sensible explanation to the lender. There are three major credit bureaus, Equifax, Experian, and TransUnion, and they will provide you credit scores. And the credit score, the lower limit is like 300 and the upper limit is like 850. So for most borrowers, there are three credit scores available from these three bureaus. And the lenders look at all three credit bureau reports and take the middle credit score for the lending purpose. They typically take out the lower one and the top one and then say, just look at the middle one. And that's your credit score that they use for giving you the loan.
लेकिन कभी-कभी एक या दो स्कोर्स ही अवेलेबल होते हैं या फिर कभी-कभी तो क्रेडिट हिस्ट्री भी नहीं होती. तो then what happens? Yeah, if you are married, which credit scores get used? Is it like husbands or wives? दोनों का use करते हैं?
That's a good question, Renuka. So, if you have only one credit score available, and that happens with people who are not in this country too long, and then you may have only one credit score available because you maybe bought a car and only that credit bureau knows about it, because the car company ended up running credit report based on that particular credit bureau. So when you have only one credit score, there is no choice but to use that one. When you have two credit scores, the lenders must use the lower of the two credit scores. And when you have three credit scores, they of course use the middle one. Now, the reason for that being, lenders are actually trying to protect themselves. It's not about you trying to get maximum possible loan. It's about the lenders protecting their money by giving you the loan. And the things also get more complicated when more than one borrower applies for the loan. In this case, typically, you have to look at the lower middle score of the two borrowers. So between the two borrowers, if there is a middle score, and then lower of the two will be the one that would be considered. If you have more than two borrowers, again, the things will be the same way. And same thing happens with husband and wife typically.
तो आपका क्रेडिट स्कोर अच्छा है तो आपको रेट भी अच्छा मिलेगा, राइट?
Yeah, absolutely.
So listeners, do call us in 510-770-1550. We have Amit Inamdar in the studio. If you have any questions regarding mortgages, real estate, just call us in 510-770-1550. तो अमित एक बात और बताइए कि अगर क्रेडिट रिपोर्ट रन किया है तो you need to have, is it whether you individually qualify to buy the home or joint application like husband and wife, is that the only way for the loan qualification?
Well, I mean, like we talked about what the middle score is getting used, right? So if the middle score is getting used, then the lower middle score is getting used. So now maybe husband has a lower score than the wife does, and the husband score will be used. So next question is like, what do you do? So you have to see whether husband by himself qualifies for the home or wife by herself qualifies for the home. And based on that, we will actually figure out whose credit score can be used. So looks like we have a call. Hello, this is Amit. Can you hear me?
Yeah.
Hi.
Amit. This is Krishna here.
Hi, Krishna. How are you?
Good. How are you?
Wonderful. How can I help?
Yeah. So we have a couple of friends. So we got a land in Fremont.
Mm-hmm.
So we thought of kind of building a communal living there.
Mm-hmm.
A couple of friends. So we approached a lender. So the lender gave us around 5%. So most of us got very good scores, like a 750, 760.
Mm-hmm.
So do you think is a good rate, or we can shop around? We can go through different lenders to get a better price?
Well, I mean, if you are getting the land in Fremont and you are getting a 5% rate, that's a great rate because
we already got the land. We already got the land. So it's a construction loan.
Oh, construction loan. I see. You are getting a construction loan. Construction loans, yeah, yes. Of course. I mean, so this is the rate for the construction loan for the installments that you are going to get, or this is the rate that you will have for a construction to permanent conversion?
So this is for construction, not for conversion.
I see. Okay. So the thing is, to tell you the truth, a lot of lenders will actually include the loan payments into the loan, and their loan balance will go up during the construction. So you really don't have to make any payments, and that's how most of the construction loans work. And then they will convert it from the construction loan, which is a variable rate loan or an interest only loan, to a permanent loan at the time of construction completion. You know, so yeah, so you're getting a good rate, so I wouldn't worry about it.
Oh, okay. Yeah, thank you.
All right. Yeah, sure. All right. Looks like we have another caller, Amit here. Who am I talking to?
Yeah. Hi there. This is Sunny from Fremont.
Hey, Sunny. How are you?
Good. How are you?
Wonderful. How can I help?
My question is regarding the 10x1 ARM for a new home purchase. Let's say for a score of 770 and a jumbo loan. What's today's 10x1 ARM?
Well, I don't have the rate sheets on me right now. Okay, and is it? Are you actually trying to buy a condo, or you're trying to buy a single family home?
Single family home.
Okay, so it's a single family home, and what kind of down payment are you making?
20%.
20%. So 20% down payment, single family home, and you want to know the rate for 10-1 ARM. Can you call me, Sunny, after the show, and I will be able to help you out?
Sure. Do you have like an idea of the range? Maybe what was there yesterday? Because it will be probably in the kind of the same range.
Those will be in the plus minus 4% for a 10-1 ARM. They will be very close to the 30-year fixed rate. Okay.
Oh, really?
Maybe around 0.25% lower at the most. Yeah.
Okay. All right.
Thank
you.
Yeah, sure.
Thank you.
Mm-hmm. All right. So,
listeners, you can always find Amit Inamdar. Just Google his name, Amit Inamdar, real estate broker. His email address is amit@ownsweethome.net. It's OWN sweethome.net. And we are talking today about the loan pre-approval, and credit report is the key, Amit. We're talking about the credit report.
Right. And we're talking about the credit reports for the husband and wife and the combination of the people and all that. And we actually talked about whether the husband or wife will individually qualify for the home by themselves. So that's what needs to be determined, and that's where we will look at individual incomes. And if you look at but at the same time, if you look at how much money you are making, sometimes you may feel comfortable about actually buying a home of certain amount, or you may have comfortable zone as far as monthly payment that you are able to make. So from the standpoint of how much money you have, you will basically figure out what are your financial obligations created by the new home, what are your monthly expenses, how much money you need as a discretionary expense for entertainment, buying maybe fancy clothes, fine dining, fancy cars, fast cars. And you may come up with saying, hey, Amit, I feel comfortable buying a home in this particular range. And typically, and if you are actually over zealous and say, hey, I want to buy a home really big on a hillside and all that, you may actually think about buying that, but the lenders may actually curtail your maximum qualification because they are the one who are going to tell you what your maximum qualification is going to be. Looks like we are having a caller again here. Hi, this is Amit. How can I help? This is Pinky or Rinku?
Yeah, this is Rinku.
Hi, Rinku. Right. How are you?
And I'm good, thank you. And how are you?
Wonderful. How can I help, Rinku?
So I have a question in regards to basically we own a home,
mm-hmm.
and there are two options which we are debating on.
Mm-hmm.
One is for an investment property,
mm-hmm.
By an investment property, how much down payment do we have to do?
Well, it depends on what your investment goals are, okay? I mean, if you're looking for a positive cash flow, you may have to put in, as much as like 40-50%, especially in the Bay Area. If you're trying to buy the property outside of the Bay Area, you may get away with like maybe 20% down. So the whole thing kind of depends on what your investment goals are. And as far as what's the minimum required to get a down payment, you can get a loan with like a 20% down. You don't have to put more than that if you don't want to. And you will have a negative cash flow, and you will have to basically deal with that one. But if you need me to do any specific calculations or specific areas you want me to identify that will give you a positive cash flow, just call me after the show and we'll go from there, Rinku.
Oh, can I ask one more question?
Yeah,
or
go ahead. Go ahead.
Thank you. So, and what if how much down payment do we have to do in case if we are planning to move to a better location, which means, something, we are in San Ramon right now, so if we plan to move to Mission or, so how much in that case, now that we are moving to, it's not an investment property, we will be moving to that property, how much in
right. So typically when you are buying a house with a jumbo loan, like the loan is definitely going to be $625,000, and anytime you get a loan like that, you need minimum 20% down. Okay, I do have loans where you can go up to $750,000 with a 10% down, but you don't get a home for $850,000 in Mission unless you have a large down payment and you bring down the loan balance down to $750. I can still get you a combination of some conforming loans to kind of make that happen for you. Okay, so yeah,
all right. So
thank you again.
So much for that.
Sure. All right. So we were talking about how does one decide on how much home to buy, and we talked about things like the expenses and stuff, right? Ratios and stuff. And yeah, exactly. So the lender will typically go up to like 43% of your gross income. So if you make $100,000 a year, the lender is going to say your total debts should not exceed $43,000 per year. All right?
Okay. So the listeners' market has very low inventory, prices are rising, and under new rules, the buyer qualification is reduced. That is actually making the market tougher on the first-time home buyers. So when Amit works with buyers, he will pre-approve you in advance for the loan. This not only helps buyers but also helps sellers. If you are planning to sell, all you need is one qualified buyer to buy your home. Amit has already pre-approved those buyers. So whether you want to sell in open market using Amit's proven marketing methods or want to do a silent market sale, you can call Amit directly at 510-364-6686. You can also visit his website, ownsweethome.net. That is OWN, ownsweethome.net. And if you forget these numbers, hey, you know what to do. Just Google Amit Inamdar, real estate broker, and you will know ways to find him. So listeners, we have been talking about the mortgages and loan approval process. So Amit, so far we have talked about the credit scores and borrower income. What else does the lender look for in a borrower to get them pre-approved?
The next thing is, of course, you're having a job. Being in the same line of profession for a period of at least 2 years is very, very important. Loan applications will typically ask you questions like the number of years you've been working and the number of years in the same line of profession. Typically, the history shows that if a person is in the same line of profession for 2 or more years, they are likely to continue in the same field and make same or more money going forward. However, for a lot of software professionals we are having in the Bay Area out there, beware of the lure of being an independent contractor. If you switch from being a W-2 salaried employee to 1099 independent contractor just to make more money so you can afford a bigger home, lender is going to look at it as if you just started a business. And that means now your income is calculated based on profit loss statement. And unless you have a fixed tax, if you have filed taxes, it's very difficult to know what your expenses are going to be. And what will be your net income for qualification for the loan. So you need to be at least 2 years in the business. I mean, I have some lenders who will go as low as 6 months depending on when you actually start your business. And under this situation, just remember it's difficult to obtain a loan. So we have another caller. Hello, this is Amit. How can I help?
Yeah, hi. I took a 80-10-10 loan last year for a property value of $600,000. So the property value has now gone up, and I want to refinance. My original for 80%, the rate was 4%, and the other loan was around 5.24. So I want to know if I refinance, will it be profitable for me now, or?
That's a question that I can definitely answer when we talk afterwards. But the thing is, the rates are definitely higher than 4% on your 80% loan. Okay, so if you combine, the rates are higher than 4% on the 80% loan that you currently have. Okay, on a 30-year fixed. So your rate on the 80% of the loan will not go down, in my opinion. Okay, so it may not benefit, but if you combine the two loans and look at an overall savings over the duration of your home ownership, there may be some savings, but that will require some calculation. What's your name?
My name is Padma.
Padma, okay. So Padma, let's do this. Why don't you call me at 510-364-6686 after the show, and we can figure out whether the refinance is going to be beneficial for you.
Sure.
All right, thank you.
I can surely give you a call.
Wonderful, thank you.
So Amit, looks like the things are getting complicated with the salary, employment, and business and everything. So what if someone has been an independent contractor and decides to become a full-time salaried employee? Or better, I mean, if they have a business and as well as they are working, meaning they are salaried, what happens then?
Right. So these are very unique situations. I mean, there are people who have regular jobs and they are also running a side business. And that is why it's very critical to share all your finances with a competent loan officer. You, like me, will feel more comfortable dealing with a knowledgeable mortgage professional who can answer all your questions. I've been in business since 2001, and I have seen many individuals with variety of credit, income, and asset scenarios, and I know how to deal with them all. Also, being approved with over 100 lenders in this business who specialize only in home loans, I can choose a lender that fits your specific scenario. Some lenders are averse to risk taking, and some situations, the complicated situations you mentioned, may require a specific lender. Because if you actually have a loss in the business you're running and you're creating that loss just because you can get the tax deduction, the problem is going to be you're going to qualify for a less home because the lender is going to use that loss against your W-2 income and qualify for you for a less home.
Okay. You want to take a break or you want to continue?
Well, we can play our Happily Ever After ad now.
Sure.
Right?
Have you joined the Happily Ever After Club?
Happily Ever After Club?
Happily Ever After Club. Membership is automatic once you buy your dream home from Amit Inamdar. He's both real estate and mortgage broker. One stop, no need to shop.
Oh, Amit Inamdar from Own Sweet Home.
Yes, that's Amit from OWN Own Sweet Home. Call him today, 510-364-6686. Again, 510-364-6686. Or visit ownsweethome.net. That is OWNOwnSweetHome.net. DRE number 0135552 and MLS 236574.
Welcome back, friends. This is Amit Inamdar, and if you are in the market to sell, buy, or finance your home, you will get unbiased advice that will save you money. That is my promise to you. To get hold of me, just Google my name, Amit Inamdar, Real Estate Broker, and you will know ways to find me. Having all your questions answered at one location and by one person means saving time, money, and having peace of mind that you are cared for by someone like me who knows this business. Today we are talking about mortgages and the loan approval process.
Yes, Amit, we were talking about the loan approval process, and so far we have covered credit, income, and assets. So any other considerations?
The loan approval process, if not evaluated upfront, it's like jumping through the hoops. So you'd rather know what problem you may face in the loan process for your specific situation and find correct ways to deal with them before it's too late. Many underwriters, especially from lending institutions other than the major banks, may use common sense underwriting. In situations like that, they may compensate your lower credit score with higher down payment or low debt-to-income ratios. There are also lenders who specialize in loans to people with troubled credit. In recent years, your tax returns have become very critical in the loan process. Every document provided to the lender needs to be verified by two different sources. Of course, one source is you. For example, if you provide the pay stubs, they will be verified against the employment verification. If you provide W-2s, they will be verified against the IRS tax transcripts and so on.
Wow, so it's very important to keep all your documents ready.
Absolutely, absolutely.
So Amit, we talked about the borrower and mortgages. So do lenders rely on the home you are buying when giving a loan?
Of course. Because the home you plan to buy is a security for the loan. Okay? So if you plan to buy a fixer-upper, and a lot of people have aspirations to buy a fixer-upper, fix it, and save money and get it cheaper and all that. But they want to do it using the lender's money. So if you are looking at a fixer-upper and trying to get a loan, forget about it. How will the lender know whether it's a fixer-upper or not? The lender will have the appraisal done, and the appraisal will write that this house needs repairs. So because of that, the lenders will know it's a fixer-upper and they won't give you the loan. So lender will need the home fixed before lending you the money. And are you as a buyer going to fix the home even before you own the house? Probably not. So this is also an important factor for sellers to consider, because if you are selling a fixer-upper, you have to find a all-cash buyer to sell your home. Other times, even though your home is in perfect shape, lenders may deny the loan. For example, if you live in a community association, like a homeowner association, and it has got, say, more than 50% tenants, because that's a great place to rent the place and a lot of investors have bought the properties, the lenders will refuse to give you the loan. So the type of property also matters, whether it's a condo or a PUD or a single family home or a townhome. And if there are city gives a citation against the property, that may impact the loan. So there are a lot of other things to consider when buying the home, and also when you're selling the home too, because you have to find the right buyer based on the property shortcomings.
So looks like every buyer must do their homework with you before submitting that offer. So do sellers also need to worry about the loan?
Of course. I mean, as I said, if the buyer doesn't qualify for the loan, then they can't sell the house. So a lot of times seller will put like a lot of emphasis on marketing the property or who is the best marketer out there. But at the end of the day, what you really need is a qualified buyer. So when you actually work with me as a seller, I am coming up with qualified buyers. I'm actually evaluated them and to help you out in this home selling process, as I have helped the buyer with qualification and the home buying process.
So obtaining a loan on timely fashion is only possible if you have done your homework. Contact Amit Inamdar for getting your loan pre-approval. He will review your financials, help you structure your finances to present a strong offer to seller. If you need to have additional funds to buy a home, Amit will guide you on ways that are acceptable to lender. You cannot borrow money from friends or credit cards to pay for home down payment. It is also critical that your credit report is clean. Remember, mortgage-related credit scores are different than the credit scores obtained by you from a free credit report sites.
Okay, thank you, Renuka, and listeners, have a great weekend and own sweet home.
The views, opinions, and statements expressed in the preceding program reflect the views of the program contributors and do not necessarily reflect the views of AAA Broadcasting LLC and its management or its sponsors.
देवी और सजनों, कभी-कभी बच्चे भी ऐसी बात करते हैं कि हैरत होती है। कल एक बच्चे की बातें सुनी और आप भी सुनी।
शेयर, बाइट और बीट